Also, in August 2022, we saw this steep downtrend. So what you see is when you look at the bond market volatility, when you have periods of kind of increased volatility within the bond market, that usually correlates with some sort of kind of risk off movement, risk assets, stocks and stuff selling off.
Welcome back to another episode of WAGME TV. The markets are down today, so we're going to take another approach and check out some of the macro stuff that's going on in the U.S. economy and some other charts. So I'm going to pass it over to Zoe to check out the MOVE Index. Take it away, Zoe.
All right. Yeah, guys, we wanted to give a little bit of a macro update this week. I think there's a lot of things moving right now in kind of interesting ways. We saw gold hit like an all-time high. Obviously, we're paying the most attention to Bitcoin, but also, wanted to look into equities and like the broader market. So wanted to provide a little bit of an update for you, and we want to start with the bond market. As we've talked about many times on this show before, like the bond market is kind of where you would consider like the smart money, if you will, in the market. So a lot of times paying attention to the bond market gives you kind of advanced views on what the most sharp investors are thinking. And so what we're looking at here is the MOVE index. So what this is essentially tracking is the implied volatility, so the forward-looking volatility of the bond market. And it's very similar to the VIX index, but instead of the VIX index tracking equities, the MOVE index tracks the bond market. So what we're seeing here is over the last 2 to 3 weeks, we've seen a quite a steep rise in the MOVE index, meaning that the volatility in the bond market is going up. The main thing to watch here is the first or the previous few times this happened. September, October this year, or in 2023, as well as March of last year, in March 2023, and kind of starting in August of 2022. We go back and look at those periods, and like we do see similar kind of like steep rises in the MOVE index. And we go back and we look at the S&P during those times. Obviously, you've got last year, March 2023 was the Silicon Valley Bank collapse. This past year, in kind of this like August to September zone, we also saw kind of a move down. And then also in August 2022, we saw this steep downtrend. So what you see is when you look at the bond market volatility, when you have periods of kind of increased volatility within the bond market, that usually correlates with some sort of kind of risk off movement, risk assets, stocks and stuff selling off. So that's one thing I wanted to point out and draw everyone's attention to, and that kind of leads to a good segue into some of the other charts we're going to look in today. So I'll pass it to Mata to talk about the S&P and generally where stocks are.
Yeah, that's super interesting stuff. I think something that we were really talking about before we hopped on here was really the idea that the S&P stocks, et cetera, they have been going crazy for the last couple months, right? So in general, right, it was probably in need of a little bit of a pullback. I thought something that was really interesting is we had this pretty large wedge back from October of last year. You can see the top line, it came and bumped up against this many times, and it got smaller and smaller and smaller, and it really stayed in this for a long time. It tried to pop out of here a couple times, as you can see, but we finally got that breakdown at the beginning of the quarter, beginning of April here. So it broke down. You can see it actually came back up and retested that line again. So now it's moving downward again. So really what we call that is a confirmation of a breakdown of this pattern, right? So not super surprised to see it go down to this previous support level, right? I would say we wouldn't necessarily expect it to move down this quickly, right? Those are three really, really big red candles for sure. But again, we're going to have a little bit of support here. Probabilities would tell us that we'd get a little bit of a bounce there and maybe a little bit of a pullback, for example, in the dollar, right? It all depends, though. Anything can happen. At the end of the day, right, it's all probabilities, so this could blast right through here. I think one really interesting area to look at on the S&P is actually the previous all-time high, right around this 4,800 level, as you can see back in January of 2022, corresponds to this as well. And I think it's a really good area to start to look to re-enter into some of these equities. Hopefully, we get a pretty good bounce there. Obviously, we have to reevaluate once we get to those levels, but I could see it dropping pretty significantly. But in the short term, I can see this getting a little bit of a bounce. I would say I'm not super bullish in the short term on equities, stocks in general. I would say, medium term, I am a little bit more bullish on them, however. So I think this is just a natural pullback that we needed. Hopefully, nobody had too much in some of these equities that have gotten hit really hard. So just stay safe out there. And I think one chart that we always look at, right, for a little bit of confluence is Bitcoin, right? So how do we kind of start to understand a little bit more about Bitcoin based on what we're seeing from the Move Index, from the S&P, things like that. So I'll pass it over to Sia to run through that.
Yeah, very interesting charts there, and kind of going to share some similar sentiment on kind of short-term bearishness, but obviously long-term bullish. So let's pull up the Bitcoin chart here and take a look at where we're at and a couple of key levels. So right now we're looking at the daily on the Bitcoin chart. And what you're going to notice is right now we're trying to battle about a 62K, just above 62K, 62.5K support right now. And so Bitcoin's actively trying to hold that. If we do, I think we might be able to range between that 62 and 68, 69 level. But with the way things have been going and the way that equities have broken down, the way that alts have broken down, and obviously with some of the macro bearish news, wouldn't be surprised to see this break down further below this support. And then obviously we'd be looking at something closer to like 57 as kind of the next realistic support for Bitcoin. That lines up with the 786 fib level, as well as the trend line coming from one of the previous local highs. So this is kind of where I'd be looking for Bitcoin to break down to first. And then honestly, what I think may happen is this 200-day moving average will move in between the 786 and the 618, so into this area. And then that actually will line up pretty well with this previous resistance here at about 52.5. And if you actually go back to the previous bull run, when we had this kind of, fake out top, it basically was close to the top. We had this kind of fake out top and we dropped down and dumped. We actually intersected with the 200-day moving average and then used that as a major support here to get back up to our actual all-time high. So I think that, it's possible, depending on how big the dump is this time, that would happen again. But on the reverse side, it is interesting to see that we're kind of at the same level in terms of an RSI that we were back when we kind of did this crazy pump in late January. So we were sitting at, roughly, 33, 35 for the RSI. And now we're sitting at about 41. So it's going to be interesting to see where we're headed next. But if the bearish news continues, I would kind of think that we're going closer to that, between 57 and 55, 52-ish range here.
And real quick question, Sia, with this graph. If you were to go in front or before the last bull run, how was the price interacting with the 200-day moving average? Because I really feel like that's kind of where we are. Okay, so just like, you outlined there, it is that intersection, and then we shoot back up again. And so do you think we could see prices of, what are we at, 70? The top was 70K. Do you think we could see 80K, 90K? Is that how you think the movement would go? Or are we saying that we're even earlier in the cycle than where this intersection happened?
I think that's a really, really good question, because part of me thinks we're earlier in the cycle. But I guess at the other point, I mean, this is April to November. So 7 months. So it's still quite a bit of time. And I think that timeline could still kind of play out. But I did have, and I deleted it before, I did have a trend line here that I could just probably draw again really quickly, going from all the Bitcoin tops here all the way through, like more like the recent timeline that we'd see here. So if Bitcoin went on the same kind of trajectory as it did before, extrapolating this out a little bit, obviously this is going to be perfect doing it on the fly, but extrapolating this out a little bit, like you'd expect Bitcoin to be, up in this area, 108, 110, on a longer time horizon. If we were to kind of go, that's about the same-ish time frame, a little bit more. If we went, because we're in April now, and then November would be right here, so we'd be looking at like 107, 108. That'd probably be the closest, probably more conservative. I think a lot of people think it's going to go higher than that, but based on some of the loose trends on those top trend lines, that's what we'd see.
Yeah, definitely interesting to look at.
Yeah, I think at the end of the day, right? I mean, the markets are very, very emotional, right? So it's heavily driven by emotion, and as a trader, as someone who's an investor, you kind of have to tone that out a little bit. So if you're looking at any of these things, right, the things we went through today, S&P, Bitcoin, et cetera, as very long-term assets, I don't think it's anything to be too nervous about at this point. Still fairly bullish from a longer term perspective. It's just you're maybe going to see a little bit of volatility here with a lot of the macro stuff going on. So, of course, we want to cover that. That impacts a lot of the altcoins that we talk about all the time. They saw very bloody red days over the last couple of days. So, yeah, just wanted to end with that as well.
Yeah, thanks for that, Mata. Well, I think those are some pretty interesting charts. I think they really outlined where we are currently in the markets. And if you like this content, feel free to like, comment, subscribe below. We'd love to hear your thoughts on where you think some of the prices could go. And as always, this isn't financial advice, so please do your own research before investing in any of the projects talked about on here. But as always, WAGME, and we'll catch you next week.